The remote work housing crash and recession has begun as Wall Street companies are now demanding that remote workers return to the office. The latest being Goldman Sachs, who just sent a memo to their employees requiring that they return to the office 5 days a week starting after Labor Day, which means that certain cities around America are going to crash hard. These cities that had a big influx of people during the pandemic, many of those workers are now going to be forced to move abruptly across the country, or some of them might even be laid off or fired. Because here's the dirty little secret about what these Wall Street companies are actually planning here. These companies are trying to do something called a stealth layoff, where they can get rid of a lot of the people that work for them without actually having to fire them. And the easiest way for them to do that is to target remote workers, because they know a lot of remote workers are not going to come back into the office. And when those remote workers don't come back in, well, just listen to Elon Musk. He says, we're going to assume that you have resigned. You will no longer be working here. And I predict these stealth layoffs are going to number in the millions over the next 6 to 12 months, which is going to have a huge negative consequence for the US economy, housing market, and stock market. Particularly in the cities with the highest share of remote workers, we're going to see these local economies and housing markets get crushed. One good example would be Sarasota, Florida. According to LinkedIn, over 1/3 of the job applications in Sarasota were for remote work only. That was top 10 in America. And now that the influence of remote work across America is declining and corporations are calling people back into the office, we're seeing, not surprisingly, inventory on Sarasota's housing market explode. As this video goes along, I'm going to cover the top 10 cities that are most exposed to this remote work crash so you guys can know what you're getting into if you're a home buyer or a real estate investor right now. But first, I want to explain why these companies are demanding that workers come back into the office and why they're actually hoping that a lot of workers don't come back in and they can fire them. And it's because Wall Street corporations hired way too many people during the pandemic. They went just a little too crazy. And a great example to use is, again, Goldman Sachs. You can see they increased their headcount, their number of employees, from 38,000 in 2019 to 47,000 here in 2022, a 25% increase. That increase in headcount was all well and good when Goldman Sachs' revenue was going up, which it did by a lot in 2021. Their revenue went up to $59 billion, but now we have a problem. In 2022, the revenue is down to $42 billion on an annualized basis, which means that Goldman probably needs to cut their workforce by 15 to 20% to get back to a sensible level of employment given their revenue. Which makes you realize that this supposedly strong job market in America that we're experiencing right now is an illusion. It was based off the free money, the fake money that the US government gave out during the pandemic. It gave a signal to a lot of these businesses to ramp up and hire workers. Well, now that that government stimulus is being sucked out of the economy and now that the recession is underway, these corporations don't have use for these workers anymore and are going to find some way to get rid of them, whether it's through a layoff or whether it's through forcing them to quit. And the cities that are most exposed are going to be the ones with the most remote workers. One of the metros that stuck out to me on this list was Las Vegas. 26% of Las Vegas's job applications on LinkedIn last year were remote work only, which makes it a city and a housing market that is really exposed to this return to the office. And I think this is something we're actually already seeing happen, because if we look at the number of homes for sale on the market in Vegas, that has just shot up out of control over the last couple months to a level that is now above where it was before the pandemic. Vegas in particular derived a big benefit from a lot of tech workers moving there during the pandemic from California, from cities like LA and San Francisco. Well, now these tech workers are moving back, which means that the inventory is going to keep piling up on the Vegas housing market and that the housing crash is going to get worse. And if you want a clue or a hint to the cities that are already experiencing this remote work crash like Vegas, just take a look at this map, which is looking at the county level gain in inventory on the market year over year. And just take a look at these areas in red. These are the counties that have had the biggest surge in homes for sale year over year, according to Realtor.com. You can obviously see a huge pocket in the mountain regions of America, whether it's Vegas or Phoenix or up into Utah and Idaho. These were huge remote work havens during the pandemic. And not coincidentally, these are the housing markets that are crashing first. But I also want to point you to the southeast. Take a look at Tennessee, everyone. You can see huge gains in inventory across suburban Nashville and Rutherford County. If we go to eastern Tennessee and Sevier County, we can see 134% increase in inventory year over year. This was a big remote work hotspot. And if you're a home buyer or a homeowner in one of these cities that's losing remote workers, it's a real problem for your local housing market and economy, because there's really nothing that's going to backfill that demand from that remote worker leaving, especially if it's in a location that was maybe outlying or suburban or rural. Who's going to come in and buy that house that the remote worker is selling? Who's going to come in and buy the new house that home builders were building in response to the remote worker demand that is no longer there? It's going to be a bloodbath in a lot of these housing markets going forward. And overall, this highlights the fact that America is now not only in a recession, but we're in a white collar recession. We're going to see lots of people with high incomes and high education levels lose their job over the next 1 to 2 years. For instance, data from the Bureau of Labor Statistics is showing that America has added 1.2 million white-collar jobs since the pandemic began. So we have a surplus of white-collar workers in tech, in finance, in accounting, and professional services. We have a surplus of those jobs in the economy right now, whereas we still are short 1.1 million blue-collar jobs, those working in construction, manufacturing, and leisure and hospitality. We're still short on blue-collar employment, which is why I believe we're actually going to see blue-collar workers in America do better than white-collar workers over the coming months and years. We have an overabundance of white-collar workers who are working for companies that often lose money. Nearly 40% of the publicly traded companies on the US stock market in 2021 had negative earnings and lost money. There are zombie companies who require continual infusions of debt and equity to keep themselves afloat. And all of this debt and equity that was pumped onto Wall Street, it led to the creation of a lot of fake jobs. Companies hired workers for the sake of hiring workers, not because these workers actually led to an increase in profitability. And one telltale sign that this is the case is by looking at the dramatic decline in labor productivity in America that's occurred over the last couple quarters. In fact, in the second quarter of 2022, according to the BLS, we had the largest year-over-year decline in labor productivity in U.S. history going back 70 years. So that says there's a lot of people who are employed right now in this so-called strong job market who actually don't really do anything and who are going to be on the chopping block now that the Federal Reserve is aggressively hiking interest rates and making it much harder for companies that lose money to continue hiring workers. And one of these companies that fits this mold precisely right now is Peloton. They have already laid off 20% of their workers. I think they might lay off more workers into the future as they're demanding now that their current workforce returns to the office for 3 days a week starting in November. And I imagine there's a bunch of Peloton workers out there who moved away from the corporate headquarters in New York City over the last 2 years. Maybe they bought a house in Charleston, South Carolina, which is one of the highest remote work metros. Well, don't be surprised if in Charleston we see a big surge in inventory in coming months and quarters as these remote workers are forced back into the cities that they came from. Another area that's really in the crosshairs of this remote work crash is Texas, particularly two metros, Dallas and Austin. Both of these areas received a huge influx of remote workers from California and New York during the pandemic, especially those that work in tech. Well, we're already seeing a massive surge in homes for sale in both of these areas. Like if we zoom in on the counties around Austin, we can see absolutely insane 130 to 270% increases in inventory year over year already. Then if we scroll up to Dallas, we can see actually inventory is still kind of low in Dallas County and Tarrant County, but any of the outlying counties in the suburbs and rural areas like Collin and Denton and Johnson and Ellis are getting absolutely inundated with homes sitting on the market. And to me, if you just zoom out and take a look at the entire chessboard of the economy and the housing market, the trend that I see occurring is just a reversion away from all of the pandemic trends, whether it's demand for single-family homes, whether it's demand to live in a new city or a rural area, whether it's remote work. These things are all normalizing closer to pre-pandemic trends, which is going to mean huge turbulence and big pain for any segment of the economy or the housing market that made a big bet on those trends from the pandemic continuing. Now, to be clear, remote work is not going to go away completely. Some element of remote work is clearly here to stay as companies like Pinterest and Facebook and Airbnb embrace the fact that people can work from anywhere. And if you're someone who wants full-time remote work, well, you're going to have companies and options to be able to do that. But what I don't think is going to continue is 30 million Americans working remote full-time. I think that number is going to plummet in future months, which is going to cause big problems for the cities on on this list that LinkedIn put together that have the biggest share of remote work. Bend, Oregon is number one. That's a vacation spot in Central Oregon. Over 40% of the applications were remote workers. Not surprisingly, Bend, Oregon's housing market's crashing. Or Asheville, North Carolina, 39% remote work job applications in 2021. Interestingly, Asheville is a housing market that is still very tight. Inventory hasn't gone up that much. However, I think it will into the future. And if we zoom out on this list, we can see Florida everywhere. We talked about Sarasota, but there's also Pensacola, Cape Coral, Tampa, Jacksonville, Orlando. Florida's housing market is at huge risk here of this remote work crash, which is probably why inventory and homes for sale in Florida, particularly on the west coast of Florida, have surged out of control. For instance, Southern Orlando and Lakeland are up over 100% year over year on inventory, as are Pasco and Hernando counties to the north of Tampa. And the good news about this shift is it's going to mean cheaper home prices and more inventory for the locals that live in these housing markets. The locals who actually live there and work there and are committed to staying there long term are now going to have better opportunities to purchase a home or rent an apartment at a cheaper price because these remote workers are going to be forced to leave. But I want to hear your thoughts, everyone, specifically about companies like Goldman Sachs and Google and Apple demanding that workers return to the office. Do you think this is a good thing for society? Is this a positive development for the economy and the housing market overall? Or do you think these companies are just dinosaurs who are out of touch and who are going to see their companies suffer because a lot of people are quitting? I want to hear your thoughts, and make sure to let me know. Are you experiencing this yourself? Are you a remote worker who had to move and is being forced to move back? Do you know people in this situation? Leave a comment below and let me know.